Why I'm buying growth stocks now? Hey guys, welcome back to my channel. In recent weeks, we have seen the rotation of stocks in the stock market, specifically from growth stocks to value stocks. We see news headlines such as this about the great value rotation and the long-awaited rotation from growth to value has arrived. And another article mentioning is the great rotation to value stocks underway. So in today's video, I'll be sharing with you some of the reasons why I'm buying growth stocks right now and value versus growth stocks in 2021. Let's take a look at the definition of what are value stocks. Value stocks are stocks that are considered cheap based on measures such as price to book or price to earnings ratio. In other words, value stocks are stocks that are considered cheap based on traditional methods of valuing a company. For growth stocks are companies that have the potential to outperform the overall market over time because of their potential. And growth stocks tend to be expensive based on traditional methods of valuing a company or a stock. So growth stocks tend to include technology stocks because generally, technology stocks tend to be expensive based on the traditional methods of valuing a company. So these technology stocks tend to have high P/E ratio and high price to book ratio. But take note of this important distinction. Growth stocks doesn't necessarily mean tech stocks. What I'm saying is that tech stocks tend to be considered growth stocks because of their high valuations. Tech stocks can also be considered as value stocks, but value stocks are generally associated with stocks that are non-tech related. That's the difference between value stocks and growth stocks. Now that we have known the definition for value versus growth stocks, let's take a look at some of the reasons why there's a rotation from growth stocks to value stocks. While there are many possible reasons why there's a rotation from growth to value stocks right now, the two main reasons are because of the interest rates and yields and the macro headwinds. As of the filming of this video, the yield on the US 10-year Treasury note is 1.625%. And if we take a look at this chart over here, the yield on the US 10-year Treasury note has been steadily increasing over the past few months. And these higher interest rates and yields have a disproportionately negative effects on assets with longer duration cash flows. And since the valuation of growth stocks tend to depend on cash flows expected far into the future, these higher interest rates and yields have a negative effect on growth stocks. And currently, there's a widespread belief that higher interest rates will cause capital to move into cheaper stocks with cash flows of shorter duration. In other words, a rotation from growth stocks to value stocks. This is the chart for the Nasdaq, which is the QQQ, and the orange line stands for the Dow Jones, and this blue line is the yield on the 10-year Treasury note. If you take a look at this chart over here, which goes all the way back to 2012, you'll notice that during periods where the yield on the 10-year Treasury note increases significantly, such as over this point over here, the Dow Jones and the Nasdaq has performed relatively well. Another point is over here, where the yield on the 10-year Treasury note increases quite significantly. And if you take a look at the corresponding period for the Nasdaq over here, you'll notice that the Nasdaq and the Dow Jones has performed relatively well over this period. So yes, while the theory states that when interest rates and yields rise, assets with longer duration cash flow tend to be negatively affected. However, if we take a look at this chart here, which goes all the way back to 2012, in recent history, we see that even though the yields on the 10-year Treasury note increases significantly, the Nasdaq, which comprises a high percentage of tech stocks, which tend to be growth stocks, haven't really been affected by the increase in the yields on the 10-year Treasury note. In fact, if we zoom in over here to where we are currently at, in the past few weeks, we have seen the yields on the 10-year Treasury note increasing by quite a fair bit. And during this period, both the Nasdaq and the Dow Jones have also increased. It is only recently where the Nasdaq have decreased by quite a fair bit, while the Dow Jones have relatively maintained its price. While there's a widespread belief that the higher interest rates and yields will cause a long-term shift and rotation from growth stocks to value stocks, I believe what we are currently seeing in the stock market is more temporary in nature. Because as I have shown you earlier on, in recent history, even though the yields on the 10-year Treasury note have increased significantly, the Nasdaq, which comprises a high percentage of tech stocks which tend to be growth stocks, haven't really been affected negatively by the increase in the yields. The second reason behind the shift and rotation from growth stocks to value stocks is because of the macro headwinds that growth stocks are facing right now. One of the macro headwinds is Biden's not-so-friendly policies towards tech companies. And as I have mentioned earlier on, tech companies tend to be growth stocks. It is widely assumed and accepted that the Biden's administration will not be as friendly to tech companies as the previous administration. We see here that Biden might be tempted to break up monopolies in e-commerce and social media and limit the influence of tech giants on society or impose taxes. The second macro headwinds facing growth stocks is the reopening of the economy. Maybe it's not so much macro headwinds for growth stocks, but more of macro tailwinds for value stocks. With the vaccination and a possible reopening of the economy soon, many investors out there believe that this will propel the value stocks. When the economy reopens, all these companies which have been heavily affected by the lockdowns are going to benefit the most from the reopening of the economy. And as such, investors are already pricing this into the value stocks. So the macro headwinds facing these growth stocks and the macro tailwinds for the value stocks is one of the reasons why we are seeing a rotation rotation from growth stocks to value stocks. However, these are my thoughts about the rotation from growth stocks to value stocks. I believe that growth stocks, especially tech stocks, are here to stay for the long term. Sure, in the short term, maybe in the next couple of months, value stocks will outperform these growth stocks. But I still continue to believe that these growth stocks, especially tech stocks, have the greater long-term potential. If you are an investor looking out 2 to 3 years, I personally believe that this rotation from growth stocks to value stocks is more of a blip when you look out in the long term. Even with the reopening of the economy, people are still going to rely on technology. It's not like when the economy reopens, everyone is going to throw out technology. Technology is and will continue to play a very important part in our lives. Sure, you cannot ignore that the momentum and trend is with value stocks right now. And if you are a shorter term trader, you'll definitely be able to make money with value stocks right now. I'm not saying that you can't make money with value stocks. I just personally believe that with growth stocks, the long-term potential is still with them. And if you take a look at this chart over here, this chart depicts the value stocks versus growth stocks. Value stocks are indicated in blue and growth stocks are indicated in red. And from this chart, you can see that in the past 10 years, growth stocks has outperformed value stocks. Sure, there may be short periods of time where the value stocks outperform the growth stocks. But over a longer period of time, we see that growth stocks clearly outperform value stocks. What are your thoughts on value stocks versus growth stocks? Let me know down in the comments below. If you have enjoyed and learned something from this video, smash that like button because it will really help the channel grow and allow me to produce more content such as this. And if you are new to this channel and haven't already subscribed, make sure you subscribe to this channel because each week I release new videos about investing, trading and the stock market. I'll see you in those other videos. To your financial success.